There you go. Okay, thanks everybody for coming. Today I wanted to go over, we'll do two things tonight. One, we're gonna go over this strategy. I call it um, the Airbnb trade. It's a double diagonal trade. For anybody that knows me, I try to name all my trades some fancy name. So Dennis is laughing because he knows me pretty well. But the reason I named this the Airbnb, it's a daily income strategy. You're gonna sell a call and a put on it every day. And then you can do this on SPY, SPX. You could do it on the Qs. There's a few that have daily options. Now, you could also do it weekly if you want to, but this is based on the SPY. And then you could ramp up to the SPX.
Is there any difference between you and the spy and the FPS?
Well, SPX is like 10 times the SPY. So it's bigger size, costs more. SPX is really good in that it's cash settled, you can't be assigned, and it has favorable tax treatment.
So if you're
So
doing it daily, the SPX, if you just take
it
more caps.
you just yeah, just it's just whatever we go over here, just multiply it by 10. Cost 10 times, income is 10 times. So I've been kind of testing this strategy out using the SPY and and so far it's worked pretty well. So, and all it really is, they call this a double diagonal. And that's a real fancy term for it's a you buying a long call and a long put at the same strike. And we'll go out in time for that. And then once we get that, we're going to sell a daily call and a daily put against it. And we'll walk through it. But it's called a double diagonal because you do them both sides. If you were doing just a regular diagonal, you just buy the call and sell calls against it. And this way, you're going to buy the call and the put. So it's really what they call a delta neutral strategy, meaning that if the market goes up, you're going to be okay because your call will make money and your put will lose money, offset the gain. So that's kind of the purpose of the strategy. The goal is not to make money on the longs, it's to generate income from selling the puts every day. So what we do is we'll go out and buy these calls and puts, and I generally like to go out about 45 days. And what that will do is one, give us time to sell enough calls and puts against it, but theta, the decay of that long call and long put, will be minimized. And then we're going to sell shorter dated calls and puts against it. And I'll show you that later. So effectively, this is a back month strangle and a short month straddle for those that like all the terms. Um, okay. Any questions so far? Okay. So, and these strategies are really good if you're really not sure where the market's going to go. And I don't know about you guys, but I have no clue where the market's going to go right now. So it's they try to make it more of a delta neutral. And if someone asked, let me see I thought you would like to go out further. Did that change? This is a little bit different in that I'm only going to be in this trade about 2 weeks. So I don't need to go out much further than 45 days just because in this particular strategy, we're going to do it for a week or 2 weeks, close it out and start a new one. So it's just like you're renting out an Airbnb. So, and this is a really good strategy if you want something that's kind of non-directional or delta neutral. And it's also defined risk. So when you put this trade on, you're not subject to unlimited risk on the trade. And you want less gamma risk on your short condors. So this works best when the market is in a trading range. kind of stays between a high and a low. It's not ripping higher or ripping lower. And the other thing is it works best when volatility isn't too high. So once it gets too high, you don't want to probably do this strategy. Hey, Peter. Um, and the other thing is if there's a big event coming up, big like a Fed meeting, peace talks with Iran, you might want to wait until those things have passed. Y'all saw on Monday what the market did when there was a one tweet about, a peace deal. So you want to be in, this is kind of the best, one of my favorite strategies for kind of calm markets. And we'll have calm markets again. The VIX always reverts back to and it's really not even that high right now. So historically. So it's not conducive in high volatility environments or in super trending markets. If the market is just grinding higher or grinding lower, this you want to wait before you do this stretch. So I don't have any on right now. Um, but I've since I've been testing it, I think I've done five, and I'll show you the results of those. So I'm trying to tell you, like, this is not one you want to put on all the time. This is one you want to wait for things to kind of calm down and be kind of neutral. And then it's a great income maker. So you want to wait till there's lower volatility, and then you're going to buy a put and a call at the same strike. So you can either do, and I put at the money with a little asterisk because I'll show you a variation to this in a minute. But the at the money, so if the SPY is trading at 660, for example, you're going to buy the 660 and the 660 call and put. You're going to buy both of them. And that's a debit, right? That's your house that you're going to rent out every day next 2 weeks. So that's the whole concept of it. And then we're going to sell a daily call and a daily put against it. So, and what I generally, once I put the trade on, once the trade is on, at the end of the day, about 2 or 3 o'clock, is I will take those calls that expire that day and roll them out to the next day for more credit. So, or if I can get about 80% of the credit, sometimes you'll put your trade on at 2 o'clock in the afternoon, and the next morning you wake up and you've already gotten 60, 70% of the credit. I'll roll it out that day, just for more credit. But what I'm selling is something that's about 1.5 times the expected move of the day. So for example, if the expected move on SPY is 15, then I want to go out about 20, 25 points beyond that when I'm selling my calls. That make sense?
Yeah. Are you looking at the delta at all?
I'm not really looking at I mean,
Kind of are.
yeah,
You're
kind of are.
still in the expected range, but
Yeah.
it's probably like maybe a little delta or something.
Generally what I found is the put is going to be about an 10 to 12 delta, and the call is about an 8 to 10 delta.
The call?
The call.
Call. What then?
When I sell the call, the 8 to 10.
Oh.
And that's probably just me being more cautious on if the market starts ripping higher. So I try to be a little more room on the call side.
What day expired?
Right.
Day expired.
Yeah. So if I had set one up for today, if I'd done it in the morning, I would have sold a call and a put today and then rolled it out at the end of the day till tomorrow.
Do you get enough credit, like if you're going up 20 delta, 10 delta?
I'll show you.
Okay.
And then you can tell me if that's enough. I mean, the goal is not to like really make a ton of money on the call, but it's to generate a nice income and stay in it long enough to close it out and move on to the next Airbnb. No, I didn't mean to be a smartass, but and just what I think you don't want to do is be too aggressive in selling the call and put, because then it could move through your strike, and then you got a whole different kind setup that work through. And the part about I'll sell the shorts in the afternoon, and then sometimes, and this has worked out actually probably, I would probably say half the time, the next morning, one of the short calls or short puts will be super profitable, and I can just roll it out again in the morning. So sometimes you can get 3 sets of credits per day. And then let's see, I try to close the whole trade in a couple weeks just because of the theta in your long call and your long put. Because those things are going to start, the theta increases every time. The closer it gets to expiration, the more theta is going to eat away the cost of your long call and long put. Is everybody familiar with theta? Okay, good. So that's kind of the concept. It's kind of like a short intermediate trade to make a couple of weeks of income and then start a new one again.
May I ask a question?
Sure.
The 45 day, you found it like a sweet spot in relation with the cost? What's happening if we go 60 days? Too much money to invest?
I mean,
Because
45
we
is kind of a guide. I mean, 30 is too short,
Mhm.
because normally what happens is after when a option gets to 30 days to expiration, the theta starts to grow and eat away the cost. So the idea was, well, if you sell 45 days and you sell 2 weeks of, calls and puts against it, you're down to 30 days.
Okay.
Then you close it, sell a new one.
Yeah, because I was thinking between the 60 and the 45, maybe the theta decay is slower, but you have to pay too much, right?
Right. It's just, and I'll show you a variation to this, which is even more kind of a different variation. The one I actually started on, which so the trade profits on the trade are really gonna come from the decay in selling your short put and your short call. And if the price stays, doesn't move too much, sometimes you'll actually make money on your longs, where if it moves one way, your puts will make more than your calls lose. But the goal is really not to make money on the long strikes. So that's kind of where what'll happen is if you're you have the longs and volatility spikes up, those calls and puts are worth more. So you can actually make money when volatility goes up, which is pretty cool. That's why you don't want to start one of these when volatility is high, because if volatility goes back, then your long strikes will lose money. So that's kind of how the trade works in theory. And let's see. And really the maximum loss is really going to be what you paid for the long call and the long put, unless you really let your shorts get it underwater or something. But so it's a defined risk trade. Questions? Y'all like it so far, or am I confusing everybody? They work best in range-bound markets, which is, um, when IV settles down and the market just kind of, does, a normal thing, this is a perfect strategy for that. The other thing is, if you're not really sure which way it's going to go, and you do this and you're going to make money by selling calls and puts against it. And then the other thing is you don't want really low volatility. I'm not sure we'll see that for a while, but you don't want to enter when volatility is high.
Not tomorrow.
Not tomorrow. Okay, so here's just a quick example of the trade. And so this might give you an idea of what you can get on a return. So SPY at the time on 316 was trading for about 669. So I went out to April 30th and I bought the 670 call and put, and paid $37.19, so $3,700. And then on the same day, I sold the 673 and the 663 call and put and received 52 cents or 1.4% for the afternoon. And then the next day I rolled my put up to 666 and collected 23 cents. So that was an extra, selling an extra put. So, and then later that day at about 2 o'clock or so, I rolled it out to the next day and collected another 82 cents. So really all those for the first really day, I collected 241 or about 6.5% of the cost of the trade. So not bad income for one day. So that's kind of how the trade kind of works. Yeah.
How did you know to make the adjustment? Were you being tested? Were those strikes being tested, or they were just profitable? So you,
Yeah.
how did you make that
They
decision?
were profitable when the market opened the next day. It was already, more than 50% of the credit. So I just rolled it up to get more credit.
Do you roll both legs at the same
I
time?
didn't. On that in the morning, just that one. So now I still have a short and a call that expired that day. Good question.
Brian?
Yeah.
You brought the coverage. How did you come to 670?
Yeah, 670 was really kind of at the money. You see, it was trading at 669, and I just sold it. And I like to really stick to, if at all possible, you want to stick to strikes that have enough open interest. So if I'd gone in there and sold the 669, most likely there wasn't enough open interest in that strike. So I'll just pick one that has a higher open interest.
Ryan, why in this case, I know it's because maybe the market is more to the low, but it's only 3 points to the calls and 7 to the puts, right? Usually that happen, that difference.
So I sold this one was 5 points under and 5 points over. The first one.
The first one is
This one here. I sold it. It was at 668.
668. Yes,
673
yes.
and the
No. The SPY was 6.
And then the next day, when I woke up or the market opened, I rolled this guy from 663 to 666.
No,
and I got
was
another
confused.
23.
I was confused. You bought the 660,
Yeah.
70, but was traded.
So by the time the market opened, the next day I collected 52 plus 23. That makes sense?
Yes.
Okay.
Thank you.
And then at the end of the day, I rolled these two to the next day for 82 cents. So that's all pretty much in, one afternoon or within one day.
Was 82 your profit, or what did you have to pay to get out of them?
Well, I haven't got I'll show you later.
Okay.
Yeah, but that was the credit for rolling it to the new strikes.
Okay.
That would have an expiration the next
The
day.
next day.
Mhm.
Hey, Brian, what do you do? I don't know if you're like me, but when I get money straight, like I get super tested to one side. You know what I mean? Like, what do you do when SPY just drops way below that strike or that put? Do you manage that, or how do you handle that?
It's a great question. So what I will generally do, if it drops below, the short put strike, I'll give it some time because a lot of times it will come back up. But if it's 2 o'clock, I'll roll it out and down for the next day. And what I found is when you roll the puts out, you can get a lot of credit even though you're rolling it to a lower strike.
Okay.
Hey, that untested side that you already rolled because it's profitable, like the call side. You
Mhm.
probably already rolled that because it's profitable.
Yep.
Would you roll that down and closer to the money?
I don't
Okay.
do that. You probably could, but and the problem with that is like you roll it too much like that, then you get blown away. Great questions, huh? So I've closed 5 of these guys so far. So the first one I made 20.8% in 16 days. The second one, 18% in 16 days. The third one, 20% in 8 days. And I put an asterisk by these guys because I actually on this one I was using like a 25 delta for what I bought the calls at, so not the 50. So you can see how much the return was, but it's kind of misleading because when you buy the 25 delta call and put, they reduce your buying power pretty much what you would have paid for the 50 delta. That makes sense? So it might have only cost me like the first three were like $1,000 just on average. But the buying power is probably going to be more like $3,000 just because I was such a low delta. I think that's still a good strategy. I may go back to doing that once I do it, but and then the last two were full at the money calls. And so I made 6.4% in 2 days. And then the last one I just closed out the day they announced all the stuff on Monday. I think it was Monday. So I made 5.8% in 4 days. So even though that one was one I was kind of more testing because Ivy had dropped like 15% one day, and I said, well, we could start a new one here. So that was kind of a risky one, but you can see I haven't been in the trade, don't stay in the trades all that long. Any questions? And the question is, have I tested selling 1.5 times um, one time straddle on the shorts? I try to go out as far as I think I need to for the to collect on the call and the put, but I don't want to be too aggressive because if it blows through your shorts, then you got another problem on your hands. So just put it out as far as you can. 1.5 times generally will work. And like to your question about, well, what happens if it dropped 1.5 times? I can roll it out and down again. So the odds of like 3 or 4 down days are pretty low. Let's see. Did you say the last two you sold at the money straddle for the short? No, I'm always selling out of the money for the shorts. So, okay. So here's some alternatives to what the at the money. You can use a lower delta strike. So, like say, instead of buying the 50 delta, you buy the 25 delta. Your cost is going to be about half as much. You still make the same amount of money when you sell the call and the put, so your return's a lot higher, but it will reduce your buying power. But in hindsight, looking over the returns, probably not a bad way to go. It's paying less down for your house, and you're renting out the same house, and you're getting the same rents. So that's probably an alternative that I will probably go back and try. Um, the other two were just kind of brainstorming what other things you could do to change the strategy. And one is use an unbalanced. Instead of being right at the money or selling at 25 or buying at 25 at each strike, if you're say I'm leaning a little more bullish, you could like buy the 30 call and buy the 25 put. It makes a little more bullish leaning. I haven't done it yet, but I'm tempted to try it at some point. Except I don't know which way to go. It's bearish or bullish. So, but if you were leaning, one way or the other, you could do that. Um, and then the other approach that I had, just thinking out loud, is you could do an unbalanced one. Instead of just doing, one on each side, you might do 5 calls and 4 puts. So that would just be a different way of you generate the same income from selling the calls. It just would be more bullish. So those are just, I'm sure you guys could probably come up with 10 other strategies or variations, but it's a fun strategy in um, in generating income. So the person asked a great question. What's the worst thing that can happen? The worst thing that can happen is the price moves so far one way or the other and blows through your shorts like big time. Like you can't get out of it. Your maximum loss is going to be the difference between your long strike and your short strike. That's your maximum loss no matter what happens. So the closer those are together, the lower your maximum loss is. So that's another reason why the at the money is better, right? Because if you do that 25, you're way further out of the money. So, I guess you could say, well, I'm going to buy a 80 delta call and put. But then you're like, okay, how much is that going to cost you? So, um, any other questions? Okay. Any idea what you could possibly say if you spent 5,000? It's hard to say what the max, it would just be whatever the difference between your short strike and your long strike is the most this trade could ever lose. And here's just a printout of option strat, and it just shows you kind of where the profit tent is. And this is going out to, I think this is the April 30th trade and a 0-day DTE on the shorts. So you can see how far out you are on that to sell that. Okay. So that is the Airbnb. Do you want to, maybe what we'll do is if it's okay with you guys, we'll look at bar chart. We wanted to look at bar chart. And then if we want to bring up an option chain and model a an Airbnb, we can do that. That sound good?
Yeah.
Okay. I don't want to like open up because when I go to bar chart, I'm probably I told someone it's like going down a rabbit hole. You can find all kinds of stuff. But is that helpful? Yeah.
You say the max loss would be the difference between the long and the call and the short?
If it went through your short, like it went like down all the way.
But here the difference is 10 points.
Right. So it would be the cost of your long and the difference. So, and this one probably doesn't really completely show this because I just kind of use this really to show more of the and George asked the question, if I'm doing these every day, I'm not doing these every day. I'm not doing them when volatility gets too high or things get too crazy in the market. So I've done like 5 so far in the last 2 months. So, and I'm anxious to try another one. I'm just waiting for things to calm down a bit. So.
We normally buy more than one sheet.
I'm doing it like the plain vanilla. I just buy one, equal number. Right?
Okay.
Yeah. And the goal for me will be to ramp it up so that I just flip it over and do SPX.
Okay.
Because if you go, let me just go back real quick. Yeah, you can
Be interesting to see.
let me just go back real quick.
One.
Yeah, that's great, isn't it? I'm just like if you took these numbers, this is SPY. So if you did SPX, you just multiply by 10. So it would cost you, instead of $710, it would be $7,100, and you would have made $1,400. So that's the difference between SPY and so any other question? Let me go to bar chart. And last week,
Does this require a specific level of, like level 2, level 3?
I'm not sure.
Because I know I can't sell like naked puts or calls.
Okay.
It's
It-
gonna
it's a-
require the highest because you're selling that short of data, Brian, so you're.
You need level 3. You're gonna need level 3.
I mean, they're not naked because you have.
I know the broker doesn't care because you can close out the long, like if you.
They
close out
won't
the
let me
long,
close the long.
It's like, well, they will.
Yeah, I don't know the answer to that question.
I think you need three.
But anyway, let me make sure I was sharing this with my people online.
Enough to tell what should count set to.
Okay, so this is someone asked at our last meeting about bar chart. Did I use bar chart? And I think that was like a planted question because bar chart is one of my favorite websites, and it has so much information that it's just and what I was going to do is just kind of walk through some things you can. Is everybody familiar with bar chart? It's a free website. So you don't have to worry about there is a premium version, but they have a free version, and almost all the stuff you need is free. So the one of the things that I like to do in the beginning of the day, they'll have this like a like an overview, and it will say stuff, like what happened. This usually comes out about an hour before the market opens and an hour after, and it will give you just a little bit of information on what they saw happen in the market and there's any news. But in terms of looking, I use bar chart a lot to look for information. So I just want to walk you through how I do that. And again, there's lots of different ways to do it. So if you just go to the stock page and you go over to the stock market sectors and click on this, and it will show you today how each sector did for the day. And so you can see, energy was up 2%, communications was down 2.5. So that's like a 4.5 point difference from the best sector to and you could look at within each sector a couple of different, just click on the plus and it will tell you, different parts within energy. And it will tell you how they did. You can look at one day, you can look at the last 5 days. And it always compares it to the SPY. So you can say, well, SPY was down 2%, but energy was still up 4.6% in the last 5 days. So, and what I'm always amazed is the difference between the best sector and the worst sector. I mean, in 5 days, you got a 5 or a 10 point difference between the best sector and the worst sector. So what I like to do, if I'm looking to go long on something, I'm going to look at what sector has done the best in a week, a month, 3 months. And if I want to be short something, I'm going down here to see, like who really has done terrible. That makes sense? So that's a really cool way to, and then I think, so you could look within energy and then they will list all of the energy stocks here. And you can sort them. I always like to sort them by size, how much each one cost. So, like if you see like CVX, you could click on it. And then what Barchart will do is they will tell you their rating of their technical rating of the stock. They have a chart and they do something called an alpha rate, a weighted alpha, which is their proprietary thing. And it kind of shows you the strength of the stock. And I always kind of compare it to what is the weighted alpha of SPY. So you can say, well, this one is twice as strong as SPY. Then you could click on the full chart and it'll give you a chart and you can sort. I don't know why it always defaults to 5 minutes, but here's the chart of CVX. So even though the market's been really crappy, this is a strong stock, right? Maybe almost too strong. But then you can go back, just click back and it will go back to the list. So
CVX, if you would.
sure. You want to look at the chart?
Yeah.
Okay. A full chart. Okay.
Yeah. The indicators there at the bottom.
Oh, you want to know what they were? Okay, so this is the stochastics I use. This one tells you is the stock overbought or oversold? And then I use a bunch of moving averages, the 5, the 20, the 50, and the 100.
You can set that.
You can set that, right?
I mean, with the free.
Uh-huh. Yeah.
At night, 10 now.
And I think the paid version is like 200 a year. So it's really not crazy expensive. So that is that what you were looking for?
Yeah.
Okay. And you could add, like, here's the indicators. You can add any kind of indicator pretty much you want. You can add Bollinger Bands. You can adjust the Bollinger, so lots of cool things you can. Yeah, no, it's
It's a cheap program.
and the other here's one that I was at one of their webinars, and they have let me drop this one. There's one they called the zigzag. It's something that they invented, and it just kind of tries to show you, it's in an uptrend here, a downtrend, an uptrend. So it has a lot of, that's a pretty cool feature. But there's a ton of indicators that you can use. I like, and you could use money flow, you could use RSI. They're all pretty much all in there. So that's the zigzag. So I haven't really used that one much, but it sounds pretty interesting. Let's see. So that's kind of if you want to look through the sector, analysis. And then a couple of areas that I look at a lot is there's one under new recommendations. It's still under stocks, new recommendations. You would just click that, and then it will tell you, what indicator do you want to look at? So, for example, if you said, I just want to do the 20 crossing over the 50. That's a pretty common one, right? So we can just look at that, and it will click, and it will list every stock that meets that criteria. And there's a couple of things you could do here is I always sort it based on the price. I click on it because I don't want to look at the $9 stock. But you could if you wanted to. You could look at it the other way around. Like if you were looking to sell, puts on lower price stuff, this is a good place to look. So you could do it that way. The other thing you can do is you can set up a screen, and you can go in here and you can set different criteria that you said. I only want to look at it if it's $50 or more. I only want to look at it if it's a buy or something, tons of different categories. So I just clicked this one, and these are all ones that had a recent recommendation. So that's a great place to kind of start looking for potential stocks for the day. So then, the other thing, if you want to be bearish, you could look here under cells. So you go to cells, sort it by, and it will tell you here, like go down here. So like here's one that they have as a 100% sell recommendation. And it's a strong sell. So if you want to be bearish and you're looking for ones that you want to short, it's a good starting point. You have to look at the option chain and all that kind of stuff, but it's a good place, and it will show you, like this is a stock that you probably wouldn't want to have your life savings in, right? And I don't know anything about the stock, but I mean, it hasn't done very well, right? So that's a good way to find like bearish trades.
Is that showing in oversold?
Is that showing what?
Oversold in the.
Oh yeah, it's going to be way, way oversold. And sometimes that the stochastics can be misleading because if a stock is cratering, it's going to be oversold.
Yeah.
And the same thing, like when a stock goes up, it could be overbought, but still keep going up.
Yeah.
So it's not the greatest thing in the world, but it does kind of tell you like, hey, just be aware that, that it's kind of based on their metrics, it's overbought or oversold. Does that make sense? The other thing that I think is really cool here is I told you it's like a rabbit hole, right? I warned you. So if you go over here where it says the recommendation and you hit see more, now it tells you how it's based on all their indicators. Is it a buy or a sell? And then you could go here and click on strength and direction, and it tells you it's on the 20, it's a sell, it's the maximum thing. So this is like a train wreck, right? So if you were looking at like trying to find a stock that you wanted to buy puts in or sell calls, this is your guy. I mean, that's the way I go through it. So,
And this is all free, right?
this is all free, right? So that doesn't, and let me get out of this one because this one's kind of a terrible stuff. And I didn't even plan it. I mean, it's kind of the fun. You just start looking at the different recommendations and you can sort it however you want. Like if you have a more of a medium term approach, you can look at it through that. This one here is pretty cool in that it's their proprietary, they call it the trend seeker. So it will tell you, so these are going to be stocks that we probably recognize, like AMAT and a couple of these. And so, you could say, okay, this is 100% buy. It was up 3% today. So you could look at it and say, okay, here's the alpha rating is 170. So the SPY is going to be around 20, 25. So that's kind of your base that I like to look at. You can look at the chart and you can look at it on the 5 minute you can look at it on a daily. So this is kind of a nice looking chart, right? It's got a lot of room to go. You can look at it on a weekly or longer. And so the other thing that let me just go back here. So you could go back here and say, tell me more about the stock. And, it tells you that, they're a buy signal and it's a strong strength signal. And so that's pretty good information to kind of say, okay, this is when I want to go to the option chain and see how I can potentially trade this. And then even more, you can go here and they will give you option prices, that you can look at. And I think they even had like option strategies. So if you said, I want to sell a naked put on AMAT, they give you some suggestions. They tell you how much is out of the money, what the return is, what the annualized return is. So it has a lot of cool stuff in it that I love to in the morning. I'll go around and dig through and make a list of, okay, these are the 10 stocks that I want to go and open up the option chain. That's how I use it. That makes sense?
Yes.
So it has a ton of stuff. It does a pre-market in the morning.
But they also give you like which vertical spreads you might want
Mhm.
to,
Yeah,
trade, right?
it's a ton of stuff.
There's
Yeah.
a lot of stuff.
Yeah, I mean, if you said, like I want to, any particular one you want to look at?
Um, just do SPX.
Okay. Okay, so if you did SPX, of course, it's going to give you a rating, a weak sell. Gives you all kinds of stuff. But if you go down here and you say, I want to sell a vertical spread, it will give you suggestions or different setups. So it's probably thinking.
Sure is.
And so it will tell you, what the spread is, what the risk to reward is. And then you can change the expiration to whatever you're looking at. So if you just want to look at, next Thursday, it will bring up those strikes. So yeah, so it will pretty much take whatever option strategy you like to do, you could use. I don't use that a lot, but you definitely can. Um, let's see.
Have you, and SPX, what I like is the gamma exposures.
Hmm.
Do you use that at all?
I don't.
No?
Um,
If you go down to the left and go down,
Yes, over there.
keep right there.
Isn't the free version?
Yeah.
mhm. Yeah, so this will tell you what the gamma exposure is by strike. So it's a really and
Free.
this is a free. There's some things that you'll do, and they're going to say you got to buy the
Yeah.
the premium. I do the premium, but um, so that's kind of some things you can use to dig down in the thing, and it's very
Hey, Brian, real quick.
yeah.
If you go to Max Payne, right? I was trying to understand that a little bit.
Okay.
'Cause I was, I was poking around
Uh-huh.
Max Payne today,
Yeah.
And so when you're looking at the Max Payne, where is like I'm just trying to understand like what they're doing here.
It's
I don't know, but I can tell you one thing. If you go up here to the Learn, they've got a ton of videos on stuff. So I'd probably try there first. They also have a YouTube channel, Barchart
Oh, they do?
under YouTube, and they have I love Barchart, but the guy that does the hourly seminar things is like really boring. Super nice guy, but you really have to have like 2 cups of coffee to get through his thing. But the guy that does the short videos is really good. Like he'll give you all kinds of ideas. Like I've seen stuff like on how to find the best naked put using Barchart, and it'll be a 15-minute video, and you'll want to watch it like 3 times just to write it all down.
Hey
Like I
Brian,
usually
can
have,
you hear me?
yeah,
Max Payne is simple. It's just where the point of all the contracts are, the most contracts that
okay,
are gonna expire worthless.
okay. Did you hear
That's
that?
all that means.
Okay, thanks, Rob.
Yeah, yep.
What he said was that's where the majority of the options that are going to expire worthless are. So that would be, if it goes down there, that's obviously your max pain on the put side. Thanks, Rob. Um, but it has a ton of stuff. I'll show you one more thing that I like to. I use when I look for dividends, for the in the money covered calls, I go right here on the weekend. I go to dividends, and it will say what dividends are coming up. So on the weekend, I go out here I'll start with Tuesday because Monday is already, I can't get the stock. I can't get the dividend. So, and then I will search through and see, which of these do I want to like research further. So these are all every stock that goes ex-dividend on next Tuesday. So if we buy them Monday, we'll get the dividend. So, and some of them are good dividends and some of them are really low dividends. And some of them are, closed-end funds or ETFs. So, but I will go through and look through and see which of these stocks do I know and wouldn't mind holding the shares and that they have a dividend coming up. So you can go through um, you can go through the whole week, and I do that on my watch list. I have a dividend in the money covered call watch list when the dividends are coming up. So that's where I get that. If you'd like to do earnings trades, this has the earnings by date as well. Um, Another really good one is just looking at the top 100 stocks that they rate, and that's by the weighted alpha. So, and you could look and say, I just want to look at the highest to the lowest. So this is a good place if you're looking for like really solid companies that they, have rated highly, you could go here. Like I was looking at this one today
Yeah.
and GE Vernova. So they have it, rated as um, it was up 4% today. I should have done it. But you can look at the alpha ratings, 185. It also gives you a bunch of other information. It tells you stuff like what's the beta of the company, of the stock. Give you, earnings before taxes, annual sales, so and what what groups are they in? So it has a lot of cool stuff that, you can really dig down. It shows you, you know, 23 out of the 29 analysts that follow it have it as a strong buy. So, lots of good info. When I'm looking at this, a lot of times I want to see when do they have earnings and when do they have a dividend? Because a lot of times you're like, oh, I want to buy the stock. Oh, it has earnings next week. So you just have to wait. Um, but so it has a lot of cool stuff. And then again, it also gives you a lot of here information about the company, like what they do, things like that, their growth. So, like I said earlier, it's like a rabbit hole, right? You can just keep going and dig in, and which is pretty cool though. And so, you can create your own watch list. I'm trying to, I don't want to. So you can have a watch list. You can, whatever, bears trade candidates. So
Is this the pay?
I think you can have a
I
watch list.
clicked around a couple of things. It said, you have to upgrade.
Like I think you can have like one chart kind of thing. But if you want to have multiple
Yeah.
saved charts, they're going to say you have to be a premium. But you can do the watch list. Let's see. On all these watch lists, they'll also ask you, do you want to get an email? Like if you have a list and you say, I want to get an email at the end of the day, you'll get an email showing these guys. So that's pretty cool. The other thing that I think is cool, like say you're looking at this list and you see where it says flip charts, you can click that and I'm going to flip to my template. But you can look here and I'll change this to daily. And then now you can go through that whole list on a chart. You just flip one to the next and it shows you. So it's a good way to, visualize quickly how these guys are doing. This is a bearish watch list. And, so you want to make sure like there's a checkpoint, like it's, and then if you wanted to find out about checkpoint, here's their, you go to price overview, it tells you that it's a strong sell. So it's a pretty cool website. So, and the other thing that I made fun of the guy that does the videos, but they do a great job of when you have learn, they have webinars. Let's see where they
So these, would you say you refer to Barchart as your pre-market strategy?
That's one of them. Yeah, for sure. And then like you could go here to like these are the webinar recordings and you can go back and watch any of them. And then they'll tell you, like what's coming up. And also on YouTube, they have some really good webinars. So let's see. And let's see. Oh, they also do something called the market on close. Is there anybody familiar with that? It's kind of like at right before they do it at 2 or 3:30 Eastern time. So he does it online. And what it does at 3:45, all the institutional buyers have to reveal what their orders are for the end of the day. So it tells you like what's coming up. So they call that market on close. And that's anybody can go listen to that. So, is that helpful or did I confuse everybody? Yeah. But, and a lot of times what you'll see in when there's a particular thing, like on weighted average, it'll say learn more, and there'll be a quick video about that. So, again, you could go down the rabbit hole and learn a lot, or just kind of come up with what you get out of the trade, to look for what you're looking for. Okay. Um, let's see. Any other questions about that? Is that anyone out there at home? Okay. Let's see what else. Did you want to see setting up an Airbnb? Okay, let me stop that share. Let me just bring up my platform real quick. Has this been helpful? Did I get everybody confused on bar chart? I was dying to see what the futures were doing anyway. So
Jumped up, they jumped up.
yeah,
Yeah, I said a while ago.
okay, so let's just go to SPY and then I'll share my screen. So here is just an option chain. Get this guy moved out of the way. Okay. So if I was doing one tomorrow and I said I want to go out about 45 days, right now I'd probably go out 52 days because I like to sell the monthly if I at all possible, the monthly option. So if I was going in here and we're at 653, so you could do, um, I would probably look at buying the 655 most likely. So this one trying to figure out a way to get this out of them. So this one would cost me 42.93 to put the trade on. So that's because IV is high, right? The other ones were like 3,000. So that's why we wouldn't want to put it on right now. But and if you look here, it shows you the delta, it's the delta 7. So it's slightly more bullish. If we go back here, um, say to 650, it's going to be higher. So probably 655 is a good number. And it has has good open interest. And then from there, so that one's going to cost me 42.93. And then I would go, and if I was selling one, I'd go out to tomorrow and I would go out, it's expected 7. So if you just say 10, just to six, 63 is what we would be selling. So that's probably really high. I'm just going to go up here to more like a 11 or
How are you choosing that?
well, I would look at the expected move
Okay.
and then I would make that 1.5 times. But, I think the question was like, what delta to use? Probably, this 11 is a good delta. So this will give me 14 points of room, right? So if the market rips up tomorrow, I'm going to be, 2 times the expected move. And then on the put side, I'm going to go down 663,
Where you're finding the expected move.
It on Tasty, it's right here up on the you see where it says plus or minus 6.89.
Uh-huh.
That's it. Now another way you could do is you could look at the money straddle, and if you just go here and you just type 3.59, so 6.59 is the rough way of looking at it. Just look at the money straddle. That's the expected move or, ballpark figure. So if you don't have, and most platforms will have the plus or minus. So, and then for the put side, I would probably go down, and these numbers can get goofy because it's aftermarket, so the market's not open. But say we did a 640, just 645. So I would have gotten about 88 cents on a 42, whatever I think costs. So for one day, I don't know what somebody want to do that?
Do the math.
Yeah. It's about 2%. So, So that's not for a selling a safe, out of the money call, out of the 2% in a day. And now these long strikes will lose money, some money every day by the theta. So you have to take that into consideration. But if you can make 1% every day on a trade, that's a pretty good strategy with it being delta neutral.
The expected move is different for the calls and for the put? Or no?
No, it's going to be the same.
The same.
It's just all this is saying is that what is SPY going to move
Yeah.
tomorrow? That is kind of what they're saying. Not really that it's going up or down or
So you're saying you want to go 1.5 times that?
I do, yeah.
Oh.
I mean, it's kind of like if you go too short, you get great credit,
Yeah.
but you could get into trouble, right? If it moves. But if you go too far, like say, I want to go 3 times the expected move, you won't get any credit. So I found 1.5 times is kind of the sweet spot for me. Um,
So that'd be around 10.
hmm?
You're saying that's around 10.
Yeah. I think this one was 8 delta on the put and 11 on the call. So, so I generally used to be more aggressive on the put side. Not as much anymore, but I keep, if he went up to like a 647, which is still 14 points away, now you're getting, $1.12 for that. So you can just play with that kind of thing. So, and the risk again is going to be the difference between your long calls, the 655 and your short calls. So the risk on the upside would be $12.
Right.
$1,200 loss would be the maximum you could have on there. And every day, if you do this strategy, and I wouldn't do it tomorrow, like Bud said, but when things calm down, this is a great income strategy that you can just, collect credit every day and spot. And if you do that on SPX, it's just 10 times as much. Cost 10 times as much, reward 10, same ROR. So that's the chart.
Hey, Brian, how do you keep up with your credits? Do you have like a spreadsheet or something? Like when
Oh, what you mean on this
when you
particular
have time to
trade?
roll, or you
Yeah,
have
yeah.
spreadsheet?
I do a let me show you see if I can find it.
I know for me that became like a nightmare, right?
It's
It's almost worse than the trade just to keep up with how much I'm
I mean, that's probably the biggest drawback of the strategy is that, but it's it's a pretty cool, let me show you. Here's like a sample of, how I do it.
There's also software out there that can core it for you too.
Sure, yeah. I don't know of any off the hand,
I
but
think what's called visualize.
okay.
I use Wingman. I don't know, but Wingman works too. It's software.
Yeah. I was in a webinar yesterday, and someone had said that there's a software called Option Trader Assistant. I think I sent it to you, bud.
You did.
And it's it's supposed to track all your stuff. You can journal, I didn't watch it yet, but the guy that recommended it swears by it. It's called Option Trader's Assistant. Do you use it? Do you have that?
No, I wasn't that way.
Oh, okay.
I've searched for that software, but I couldn't find it.
Oh, I found it. It's we can look later if you want, but if you just Google Option Trader Assistant, and that was a pretty cool website. So
Years ago, we had the Wingman.
Wingman, someone said here they use Wingman, yeah. So um, so there is software out there, and I just do it on a spreadsheet, but because I want to look at like, okay, how is it doing? What do I need to, and but so anyway, any other questions? I'm gonna stop the recording before I go on. Oh,
Is that your stage name or is that your real name, Brian?
which one?
Brian Terry.
That's yeah. Rob said he expected more of a pop when did they announce a ceasefire? Is that what the news?
They announced a 15-point plan.
Okay,
That's what
okay.
that-
Yeah, that's pretty weird that the market hasn't gone up more. Here's the futures for,
the oil dropped at the tail end of the day.
yeah, oil was down, what, 10% on Monday, so futures. Yeah.
Like with these trades, like I like these kind of trades, I
Huh.
do them all the time, but my dilemma, and probably you have the same one, it's like, when do you get out? Like, it's working really good, you know, so I'm like, well, do I get out now? Is there something that you use like a trigger?
Here's what I do. I buy the 45 days, and when it gets down to 30, I close it, take my profit, start a new one. Because you're right. I mean, sometimes you're like, oh, this is just cranking. And then the next thing you know, your theta has eaten away your profits.
Like, if big spikes, you know what I mean? You get that vol expansion, it just crushes you all of a sudden. You're
Yeah.
like, man, I
That-
should have taken it off, but I just feel
The one
like
trade that I got out in like 2 days or something, that was the day that the market tanked, volatility went up, and my longs made so much money. I said, well, and I lost some on the short. Yeah, I said, I got to get out of this thing. So I closed it and made a nice profit. But again, this is better in a calm environment. So probably should have waited until like, I don't know when, next summer to do this one. But it is a pretty cool strategy. Now, I did one a while ago. I called it the Delta Neutral strategy. And if you go back to the YouTube, the only difference is I did it on SPX. I went out like 90 days and I sold weekly calls against it. And then what I would do in addition to that, if the price moved, I would roll the longs up or down back to where it was trading. So it truly stayed. Um, and some of the feedback of that was, gosh, you're rolling this thing up and down kind of thing. And you are. But so this kind of the reason I said, I'm not touching the longs on this. I'll close it in a week or 2 weeks.
Do you adjust them daily and then within the 15-day period, you close them out regardless?
Yeah.
Of loss?
Because I mean, because of the theta on the longs.
But your delta neutral is basically very similar.
It's very similar. It's
Yeah.
just it's big, the biggest difference is it takes the weeklies to dailies.
Okay.
And I tried it on some of the stocks that have options 3 times a week. And so that's another version. I did okay doing that, but those are really volatile stocks. So those didn't work quite as well. So let me find my.
And a bad news in a particular stock could hit your trade.
Yeah. I mean, let me see. I'm going to stop the recording.